Hi everyone, Oliver Kollofski, Director of Wealth Services here at Sweet Financial with you. So first off, Happy New Year to you and your family. So on behalf of the advisory team of Ty, Amber, Lynn, and Brian, I'd like to take a few moments to share a few items we believe you'll find of interest as it relates to the investment markets and, more importantly, financial planning. So with the stock market down in 2018, let's look back to see what has historically happened following a down year in the stock market. So again, 2018 was down, and this will be reflected in your year-end statement. But keep in mind, some of you have a guaranteed income base on an annuity you may own, and this guarantee may be greater than the actual value reflected on your statement. So following all years since 1926, all negative years since 1926, the next year has averaged a positive 12.4% return. A nice return. So also, Decembers that fall like a rock usually bounce back the next year. So let's take a moment to look at a simple example. And this is a little bit maybe oversimplified, but let's say a hypothetical person has an investment portfolio comprised of 70% stocks and 30% bonds. And withdrawals from the account for living expenses are 5% per year. Well, that's 6 years before you'd have to sell any of your stock market holdings, thus allowing time for the stock market to recover. So keep in mind the average stock market cycle is around 3 years. So in this case, ideally, stocks would not have to be sold at a loss. This illustrates why proper planning is so important and why we use our Decision Center planning platform for retirement success analyses to know whether you are on track and illustrate what-if scenarios. We want to be comfortable and confident that you are on track. If you haven't yet gone through this with your advisor, we will bring it up with you at your next review meeting. And also, as a reminder, and we mentioned this in the video we sent out a couple weeks ago, those of you with non-IRA accounts, some of you received communication from us in the recent weeks about year-end changes as we proactively made changes to potentially provide you a tax benefit. So please know that we are here to be a resource to answer any questions you may have. Always feel free to contact us. Thank you.